So thinking high level right now on these three exchanges, Coinbase has really high fees, and all of these exchanges to buy crypto are going to have fees that are going to be incurred. Even on Robinhood, where they say that the trades are free, they're going to take a few pennies off of every trade you make on crypto. And I also, for me, I'm a big investor in kind of the top most known coins: Bitcoin, Ethereum, Cardano. I have a few other like second and third mid-tier projects that I look at. But most of my money's in Bitcoin and Ethereum because I understand them and I believe in the vision of the project. But when I started, I was using Robinhood because I was just investing in stocks there initially. I started to buy Bitcoin on Robinhood because I was already using that app. But then I quickly realized that you can't move your Bitcoin off of Robinhood. You can't move your Ethereum off of the Robinhood platform. And that's a problem because technically you want to have a wallet, a digital wallet that we'll talk about, that you can basically put your Bitcoin, your cryptocurrency on your wallet and own it yourself. Right now, Robinhood has a wallet that they let me use that holds all of my cryptocurrency. And that's not really the way that cryptocurrency is supposed to work. So thinking about Coinbase, BlockFi, and Binance, those are actual official crypto exchanges that give you the opportunity to take your crypto. You can buy it there, you can leave it there, or you can take it and put it on your own wallet. So now I want to get into the coins and talk a little bit more about Bitcoin, Ethereum, and the other altcoins. Bitcoin obviously is the most popular coin. I'm a very big believer. I'm what they probably call a Bitcoin maximalist because I see the vision. I don't want to hold my money in cash, and I want to be a part of a revolutionary technology that can be generational wealth. Y'all know I love generational wealth. I think I have a daughter. It's not really for me to say I want to get rich. It's for me to set my family up to get rich. If a Bitcoin can be worth $100,000, $500,000, $1 million in 20 years, in 50 years, then it's worth it to me, right? It's worth it to my family to have invested in it right now when it's $30,000, right? What's the difference? How sad will you be when you could have put $5,000 into Bitcoin and it's worth $1 million, knowing that you had it, but you were just uncertain about it, right? So for me, I think everyone should have at least 0.01% of a Bitcoin, okay? Because that will put you amongst a very small group of people. There's 7 billion people on Earth, and owning 0.01, you'll be like one of a million people who probably even own any Bitcoin if you get in right now, okay? And so what I think is really worth highlighting is the store of value, why people are comparing it to gold, and it's kind of being the digital gold of right now. Proof of work, which LC talked about earlier, where there's essentially, and LC, you can dive in here if I botch this up, but there's computers, which are called nodes, all over the world, where people are actively mining or attempting to mine Bitcoin, because when you actually mine a Bitcoin, you receive payment in Bitcoin. So they're getting a payment to create more Bitcoin for the network, for the monetary network to buy, purchase, and invest in. Now, the beauty of this is when there's transactions or trades that's happening on the blockchain, all of these computers are basically verifying the transaction to make sure that it's all accurate and that no one's hacking or trying to duplicate any transaction on the network. That's essentially what proof of work is. Did I get that right, LC?
Yeah, you got that right. So basically, the nodes are they're all solving mathematical equations, very complex equations, in order to actually get off little snippets of these blocks, and they work together to get these blocks to bring back into the ecosystem. So that is why the blockchain is actually proving that this technology works, because it can't be cheated, it can't be hacked. You actually had to do the math, you had to do the work, you had to pass the tests in order to get or receive some of that Bitcoin.
Here's a gem that I learned on YouTube that I kind of blew my mind. Maybe 200 years ago, when they were building this country up and the city of Manhattan was being built, there were families who originally invested in city blocks in New York, in Manhattan. They owned those blocks, and those families became generationally wealthy because they owned real estate in the most expensive market in the world. And what they do now, they don't sell their property. They take out loans against their property, against their assets. So if they want to ever create more money, they own $1 billion of real estate block. They can just go to the bank and say, give me $500,000, give me $1 million against my billion. I'm good for it. And then they'll get a loan at a very low interest rate, and they can buy and invest in new things and continue to grow and accelerate their wealth, right? So think of Bitcoin as a city block in Manhattan. We're getting in early. You never want to sell it. You can always take out a loan against your asset and create more money from that, from just holding that.
Exactly. And to piggyback on that, just what you said, like Bitcoin is how you store wealth. Is literally how you store wealth. You don't sell it. You buy Bitcoin and you don't save it for a rainy day. You save it for life. So that analogy which you use with real estate, you don't buy a piece of real estate and let's say you bought some real estate on the beach. You don't cut off a piece of the deck and say, hey, let's go buy some sandwiches or let's go fishing. Like you hold it there and you borrow against it. Okay. So a lot of these, like what I talked about with DeFi, you can have things like lending and borrowing. So you use one of these type of projects or one of these companies, you actually hold your Bitcoin there, you'll gain interest on it, you borrow against it. And then the interest that you accrue on that loan, it actually pays off what you borrowed. So you never had to actually touch the asset. You just pay off what you borrowed and you keep growing your Bitcoin while it grows in value. And what you said, Bitcoin might be 100,000 in like a year or two. The actual number is 288,000 that most people think that's going to hit by the end of the year. I'm going to say just for this call, because I don't want to speculate. I don't want anyone to get overly excited. I'll say in the next 5 years, 100%, Bitcoin is going to be 288,000. And that's the low end.
So the next thing I want to talk about is Ethereum. Type the number 2 if you hold any Ethereum right now.
I'm gonna type a bunch of 2s because, like you said, you're a Bitcoin maximalist. I'm actually not a Bitcoin maximalist. Like I love Bitcoin because Bitcoin is the champion of cryptocurrency, but there is so much other things going on out there like Ethereum. And like how we said, Bitcoin, we compare that to gold. So it is digital gold. Ethereum is the new internet. Okay, so you can either invest in the new gold or you can invest in the new internet. And that's a psychological or a philosophical thing that you need to do as an investor yourself. But it's good.
Or you can invest in both, because that's what I
do. Exactly.
But that's really good. I'm still learning a lot about Ethereum because I really wanted to understand Bitcoin. And then I realized, wait, Ethereum started to become hot and I wanted to be early because I got in Bitcoin probably when it was 30,000 in like January of this year. And so I started to accumulate up and then it went up to like 50 and I'm like, shit, I'm never going to get a whole Bitcoin at this rate. But I saw Ethereum and I'm like, you know what? I can get in, I can get a whole Ethereum coin right now. Maybe I can get 2. And if it goes up to 50 or 100 in 5 or 10 years, that's a great investment, right? And so let's just talk a little bit about some of the attributes of Ethereum. We have about 15 minutes left. So we got to move a little quicker, but talk about Ethereum, like proof of stake and what's happening on the network. Because this is actually very fascinating technology because things are being built on top of it.
Right. So basically, Ethereum has historically been proof of work, but what they just rolled out was Ethereum 2.0. So it's moving into that proof of stake. So by the end of the year, they should roll out fully proof of stake. And proof of stake is what that does is if I hold Ethereum or people that hold large quantities of Ethereum, by them staking it on the network, that means them putting it in the network saying, hey, hold this, and I actually get interest from just holding it there. That's putting more proof that the network is going to be proven to last. So if you have this much equity already locked in a vault for your company, that says I am of value. And by you staking more is how you're able to establish more. And there's a lot of other things with Ethereum, like that they wanted to go into a deflationary coin. I don't really want to dive into that because it might be too much. But what you were saying about basically having one full coin of Ethereum versus a Bitcoin, a lot of people had to understand is in the stock market, we have something called shares outstanding, right? In cryptocurrency, we have something called circulating supply of coins or circulating supply of tokens and the max supply. So what that does is whatever you see the market cap as, you have to basically divide that by how much is in circulating supply. And once you divide that, that's how you get the price. So some of these people like Dogecoin, right? I don't invest in Dogecoin, but people invested in Dogecoin saying, "Oh my gosh, it's only 4 cents and now it's 70 cents. Oh, it's still cheap. It can go to $30,000 like Bitcoin." It's never going to happen. You have to look at the market cap. So the market cap is how you value a project. Bitcoin is only going to have 21 million coins ever in max supply. Like that. That's the max. What Dogecoin has, it's in the hundreds of billions in circulating supply. So it's going to take a lot more, and it's a lot more value in the project for it to ever reach something like 30,000 or $100 ever. Like that's what you need to look at. A lot of people ape into things. We call aping. You jump into things with all your money thinking it's going to go do astronomical numbers, but it's really not, because it already has so much already factored into it with this max supply. Dogecoin should never be trading over 1 cent. It's now reached 70 cents, and whatever dip is at now. Okay, cool. But it already has like $46 billion invested in it, and it has no use case. Like I said, I'm a value investor.
No use case. And right now, Elon Musk is on my shit list because he'll sit here and hype up Dogecoin, which has no use case.
No use case at all.
And then he'll cast uncertainty onto Bitcoin, which is a revolutionary pioneer technology for cryptocurrency. And for whatever reason, his voice has a lot of influence in the technology space. So they automatically give him credence when he speaks on technology. And I hate that because there's a lot of volatility in this asset class right now. It's because it's new. And a lot of these government and institutions and banks and wealthy folks do not want it to get away from them. So they will manipulate the market. They will create fear. They will threaten to do things so that they can get their affairs in order, so that they can buy the coin, so that they can be positioned to still hold sovereignty and control over their countries and over their people, okay? So when you see countries saying they're gonna ban it, if China wanted to ban it, China would have been banned it. People are still mining cryptocurrency in China. They're still buying it. People are still actually using cryptocurrency in China. China just has not officially legalized it. And that is why they're saying that they could ban it, but really they haven't done anything that has stopped people from mining it there.
They've been saying they were going to ban cryptocurrency in China for the past 5 years. So now when the market comes out again with another article saying China bans Bitcoin, it's like, I've been in cryptocurrency since 2017. So one, I did the history, and then while I'm in it every day, I see these things and they bring it up again because there's so many new investors in the space. When they hear something like that, it's like, oh my gosh, I got to sell. They've been saying it every year. So it's really like when you see the media do things like this, they're scaring weak hands to sell, so it can now go to smart money. Smart money is now going to buy on that dip and get it at a discount. Like we just had one of the biggest dips in a bull market ever, and I'll let you know the crypto cycles, but basically everyone is buying right now because it's had a huge sell-off, and all these weak hands ran after they took a loss, and now it's going to start going back up. And you see this time after time again.
How do we know what Bitcoin or crypto to purchase or invest in? So, answer that.
Yeah, so basically research. Like I live and breathe this. So I've done a lot of research, and I've been in the market for a while. Like this webinar is a good start for a lot of people, but you're not going to be able to learn the whole ecosystem of cryptocurrency in one day. It's not going to happen. You need to stick around. You need to find one thing that you're excited about. After you're learning about this, exactly. And after you're learning about this, then you start to say, oh, what's this? And then you start to branch off, and you start to, now you're growing your tree and you're getting into all these different spaces, like what you have here on the screen. You have Polygon, Cardano. So Ethereum is a smart contract platform, right? Bitcoin is proof of, basically it's a store of value, but what Ethereum is an ecosystem that things build on top of. So you could build things like NFTs, DeFi, insurance protocols. You can do all those things, and Cardano is a competitor to Ethereum. You can also build on top of a Cardano. They're not doing it yet, but it's something that they feel like they're going to eventually do. And Polygon is a layer 2 solution on top of Ethereum. And one of the biggest concerns about Ethereum right now is it's bogged down because so many people on it. It's thousands of crypto projects that's already built on top of Ethereum, and all this money and all these transactions always hitting Ethereum network. So we have something called gas. The gas rate is raising every time that someone makes a purchase or it makes us trade because it's a bogged down network. Polygon layer 2 solution is allowing people to get on top of this solution to lighten up the Ethereum network. So it's helping Ethereum grow, and Cardano is just a competitor from the Ethereum network. So you have so many different plays. I don't want to confuse anybody right now, but there's so much going on out there. The first thing that you can do if you're a new investor, you want to look at some things like a large cap cryptocurrencies. So a large cap cryptocurrency is basically something that's going to be my standards. It's going to be over 10 billion already invested in it. And what that basically says is a lot of people trust to have their money there. They trust to hold this crypto project over a longer period of time. So if you go to something like a CoinGecko is when you look at all the cryptocurrencies and crypto projects. You can look at that, or you can look at coinmarketcap.com, and you look at these, you look at the first 100 list, and you can start up just by researching the top 10, then research the top 20, then research the top 50, and see if it's something that you want to actually invest in because it goes towards your philosophy. So just because something's a good project, like Cardano's a great project for some people, they've made massive gains. I don't invest in Cardano because I over the likes that Ethereum's going to be the winner in the end, and I have other projects like Polygon. There's other things that's competing against Cardano, and they're not even number one yet, and I feel like they're going to be winners. So even though it's a good project, you don't invest in something just because someone else is investing in it. You want to do your own research and then
let's talk about risk and concerns. That's the perfect segue.
Good.
There's a ton of FUD. There's a term called FUD. FUD. It stands for fear, uncertainty, and doubt. And as LC mentioned, the media has a lot to do with that. Governments and institutions have a lot to do with that. And I think it's because, one, they don't want cryptocurrency to pass them by. They don't want the power to shift to the people. And they, quite frankly, want to get ahead of it. They want to make sure that they can invest in it or set up systems to monetize and capitalize and regulate this currency, this technology, before it gets out of hand. So we hear a lot of things in the media, but if you don't educate yourself and do your research, you really don't know what to believe, and you probably won't act because you don't know what to invest in. So quickly, I want to just address some of the most popular concerns that are in the marketplace right now so that we can decide whether it's a good investment for you morally or economically. One is Earth. So environmentally, there's been a claim made from Elon Musk and others that it is too environmentally harmful to mine Bitcoin because of the power that it takes. Now, I'll say something briefly, then I'll let you make one quick statement on that, LC. What we find is that there's other forms of mining gold. There's other businesses like oil and other things that actually require more power than it does to mine a Bitcoin. But the way the media will spin it as if this new technology is now the biggest problem in the environment. What I think is special about this is that Bitcoin is so revolutionary and so profitable that it actually is an incentive for people to start creating solutions for environmental issues that have always existed. So there's going to be more hydro energy. There's going to be more solar energy that is going to actually be moved along because companies and organizations and governments have the motivation and incentive to now do so. So that's my thoughts on environmental. But obviously it takes time to do that. So it's not an overnight thing. LC, what are your thoughts on any of these risks or concerns?
Yeah, so basically the environmental concern, that's really coming out of China. There's a lot of people that's already using eco-friendly technologies to mine Bitcoin. That's one thing. Another thing is when they say things like that, they're scaring the general public because now they think every cryptocurrency is using proof of work. Some people aren't using proof of work and they aren't using proof of stake. They have a schedule on when they release more coins. It's that simple. They're like a regular project or a regular company in the stock market. They have shares outstanding and they decide when they release more coins into the market or more shares into the market. They have nothing to do with proof of work. So a lot of people saying, oh, all these cryptocurrencies, there's thousands of cryptocurrencies or hundreds of cryptocurrencies coming out every day and they're all using proof of work. None of them are using proof of work. Like I said, like Bitcoin is the only one, and there's a lot of people already using eco-friendly technologies.
Will government shut down or regulate cryptocurrency?
It's impossible for them to shut down cryptocurrency. So they can ban it, right? So let's say one country tries to ban cryptocurrency, then okay, perfectly fine. I use a decentralized exchange and I can trade in another country. It's a world way of doing things now. Like you're not locked into your country anymore. You're tapped into the bigger, broader world. So cryptocurrency, that's why a lot of governments are scared, because you don't need their currency to interact with someone from London or someone from Africa. There's crypto projects that's actually helping DeFi and banking in Africa and is building up those countries. And they don't want things like that to happen because now you don't need things like America to always fund them, so there's empowering, it's empowering poor people, it's empowering the middle class to do these things. It's impossible unless they all come together at one time and say, okay, we're all going to ban cryptocurrency, which isn't going to happen. They can't even say what they get up for lunch. But I'm saying, like, that's all coming together.
And that would be counterproductive to humanity.
Right,
because when have we ever as humanity stopped, okay, there's going to be cars, we're all going to have automobiles that get us around faster? No, we're not doing that. No countries are ever going to say that, because there's a level of competition. But I'll give the example to that quickly, is that imagine North Korea or Cuba. If any of you have ever been to Cuba or seen North Korea, they are generations behind in terms of technology. You know why? Because they didn't allow the internet.
Exactly.
They are now 20, 30, 40 years behind because they didn't allow the internet to happen and to be democratized in their country. No country wants that to happen. You will become the Stone Age in 20 years if you don't allow this natural order of technology to happen in your country. What you need to do is innovate and figure out how to make it work. Now, will companies or will countries regulate it? Probably. They'll find a way to make sure it's taxed. They'll find a way to make sure it's tracked, but it's really hard to track it because it's decentralized and anonymous. But that's my thought on that.
Yeah, so the thing is, regulation isn't bad. So of course you want to still pay your taxes. Like a lot of people think, oh, people are investing in cryptocurrency, they got to be criminals. No, you make money just like a regular investment, and then you pay your taxes at the end of the year. It's that simple. And when you use these decentralized exchanges, you use an off ramp. You go back to one of the centralized exchanges like Coinbase or Binance US, and then they print off how much you made after how much you put in. They treat it like real estate with your taxes. So it's taxed the same exact way. You basically use these off ramps, and they let you know how much you need to pay in taxes or how much you made. And there's also other projects. Yeah.
Right now, which one of these risks or concerns are your biggest concern, if any? Or is there anything else that is a risk or concern to you? Is it the environmental thing that you've heard? Are you afraid the government will ban it? Are you wondering which coins are legit and don't know if it's a scam? Or is it just cost too much to get in because these coins are so volatile?
Right. And to my point, there's a lot of people that's making ways for you to do your taxes easier. Now you can push a button. Well, not yet, but they're innovating. They're trying to find projects so you can just push a button and it prints you out a tax return, and it becomes simpler to even trade. So
let's talk about legitimacy. That's a big question for a lot of people. When it's so new and we don't really know who we're holding accountable. It's not like a company that we can just go, email them. Technically, you can email the people who build these projects, but it seems less accessible. How do we know which coins are a scam? Like, is Dogecoin a scam? Is Bitcoin just a scam for rich people to get richer? How do we delineate between what's real and what's fake?
So it's by doing your research and learning the technology. So even Dogecoin has no utility at all, has no use case, but still it isn't a scam. It was meant to be a fun coin. Dogecoin was one of the first coins ever made. I think it was one of the first 20 coins to ever be made for a cryptocurrency. They always said it was just a fun thing, like, okay, look how easy it is to make a cryptocurrency, and it's always traded under 1 cent. Okay, so that's what it's always been. But now there's people that's manipulating the price, and it's okay. Like, you can make money on it, but it doesn't make it a scam. Things like Safe Moon, if you heard of Safe Moon, a lot of people are pumping that. I think something like that is a scam. So what we call in cryptocurrency is pump and dumps. They'll basically pump it. They'll try to throw all this mass media out there and all these outlets saying to pump the coin is going to the moon, right? And then out of nowhere, all the liquidity gets pulled out of it. We call that a rug pull. And when things get rug pulled, you're stuck holding the bag. So I always try to tell people to invest in value projects. Now, just because your project's not going up as fast, something like a Safe Moon or Shiba Inu or something like that, like, it doesn't mean that it's not a value project. That means it's a safer project, and you're investing in technology in the future of the cryptocurrency market. So that's all I got to say about that. Do your research.
Good. So lastly, I just touch on cost. Now, right now, a lot of these crypto exchanges, I know Coinbase is rather expensive per transaction, and BlockFi has a few transaction fees as well. I think some of the other projects that are being created are trying to get the cost of trading cryptocurrency down. Which projects are doing that?
So basically, I think if you go to Coinbase, it takes a percentage of how much you're putting into crypto. So once I move my fiat currency into cryptocurrency, I buy Ethereum, and then I move it into a decentralized exchange so I can get lower fees. Now, with Uniswap uses Ethereum, what we call ERC20 tokens. Those are all coins, crypto projects that build on top of Ethereum. Now, they're becoming a lot more expensive because it's so much money going into this decentralized exchange, and there's so many transactions that now some fees are coming around like 10, 20, $50. And then you're starting to find things like Matic or Polygon. They're a layer 2 solution to go on top of Ethereum, and now you can transact for just a penny. So if a lot of these layer 2 solutions start to get on top of these ecosystems, they're going to make it cheaper for you to transact. So Binance that we talked about, Binance US, they have their own token and their own ecosystem called Binance Smart Chain. And the Binance coin, BNB, you're able to buy that whole ecosystem of coins. So I invest in DeFi, NFTs, and all that on Binance. And I also invest in those projects on Ethereum. And you want to basically find out which ones are going to have the lower fees, but they're doing things to solve those problems now. But Coinbase, that's a percentage basis of how much you put in there is gonna be what it is. It's a centralized exchange.
So I hope that was helpful for you all to understand some of the risks and concerns. There's always going to be risk and concern in any investment that you make. You just have to do your research and evaluate your risk tolerance. So going into that same vein, what are the strategies to invest into cryptocurrency? What I've heard from very, very conservative investors is just 1% of your portfolio, whether all of your portfolio, your assets, your stocks, your bonds, your real estate, your cash, your art or collectibles, all of that, and just take 1% of that number and put that into crypto. That's if you're on the super conservative side. Now, I've heard people who are maximalists and extremely passionate about crypto and have up to 80, 90% of their portfolio into crypto. Now, what you have to understand is what can help you sleep at night, right? How much risk tolerance do you have? I wouldn't advise anyone to put all of their money into crypto. I'm not a financial advisor, so I'm not telling you what to do. But I think that you have to figure out which coins you can believe in, that you understand, and put your money into something. Again, we know we can't hold cash. That's the baseline. Cash is trash. What are you going to do with your cash to either multiply that number or to store that value for longer over time? You have to decide what you're going to invest in. So the volatility that's happening now is a fee, not a fine, okay? So what that means, a fee is that you're going to go up and down. You put money into cryptocurrency that you're okay with losing. This is also the advice that I've taken. All the money I put into Bitcoin or Ethereum, is money that I almost just count as it being gone. I count it as it's been invested into a long-term investment. Whatever happens, happens. So when Bitcoin went up to 55, 63,000, I was like, whoa, I'm up. I hope it keeps going up to 100. And then when it crashed down to 29, 30, I didn't care. I was down like 6, 7 grand basically, but it didn't feel like a loss to me because I already had counted that as going to be $100,000 by the end of the year. It's going to be $250,000 in 5 years. So right now, it doesn't really affect me. It doesn't. I'm not emotionally tied to that money. That's my initial thought about how your strategies to invest. Dollar cost averaging is a really good way to invest in anything, especially stocks and in crypto, where you basically set a recurring schedule of a certain amount, $100 every month or $100 every 2 weeks, that goes into the coin that you want to buy. And that way, as the price fluctuates, you'll be getting a better average over time. And if you don't feel comfortable with what you have in, reduce your position size. Don't sell everything. If you have 5,000 in, you're like, I'm stressing out about that. Go down to $3,000 and just leave that in. You're still stressing out, go to 1,000. Whatever helps you sleep at night, leave that in there. And that's probably the best way to invest in cryptocurrency right now. LC.
So yeah, there's so much more that we're leaving off the table right now because we only have an hour. But just like you said, you only invest what you're willing to lose, like any other investment. Any other investment. If you buy art and you're looking to flip it, you invest in that project, but you have to be willing to lose that money. If not, don't invest in it. Or in stocks, the same exact way. In real estate, the same exact way. If you're looking to flip a house, what are you doing buying when the market is red hot? You wait for the market to come down a little bit and then you buy. So I do technical analysis. This is how I trade, but I know a lot of people don't understand technical analysis, but you always invest what you're willing to lose and you never buy when the market is all the way at the top. So it's human psychology, right? When we see things going up, that's when we want to buy into it. That is the worst time to buy into it. You want to wait to it to cool off, take a dip, and that's when you buy in. Now you have a cushion on your investment. Okay, so when you see things like this, and it's going against your own human emotion, and that's why smart money stays smart money, and they become richer because it's the age-old trick. They just pump something, and then when things are going up, dumb money is running into it while it's going up, and then it comes down, and now it's, oh my gosh, it's a scam. It's not a scam, it's investing. That's how the market is in traditional markets as well. But what I say is, one, invest what you're willing to lose, and then when you figure out that dollar amount for your own strategy. I'm not a financial advisor either. I'm a consultant and I educate. But what you're supposed to be doing, once you find out that dollar amount, you want to invest maybe 20 to 50% in large caps, and that could be your Ethereum or Bitcoins. And then you want to invest in some mid caps, and that's going to be a lower market cap, but has exponential growth. It's easier for a mid cap to do a 20x than it is for a large cap to do a 5x. It's just basic math. It's something that goes from 1 trillion to 2 trillion. It's a lot harder for something at 1 billion to go to 10 billion. So it's easier for you to compound on your money that way, and then put about 20% or 25% in a lot of these smaller caps. So smaller caps are the ones, if you're investing in value, it's easier for you to get those 100x gains. And those are the gains that people are talking about that is making these life-changing numbers.